You're entering CNBC TV18's Fire Safe Studio, powered by Century Ply, now with firewall technology.
A very good morning and welcome to Power Breakfast. In the Mumbai News Center, I'm Sonal Bhutra. Last day of this trading week, we have a lot to track, so let's start with the top headlines. Wall Street ends higher with the S&P 500 scaling fresh record highs. Inflation for the month of May jumps 5%. That's the fastest pace since 2008 and higher than street expectations. All eyes now on FOMC meeting next week. Asian markets start on a positive note following overnight gains. SGX Nifty indicates a flat start to trade. India's daily coronavirus count is below 1 lakh for the third straight day. Recoveries outnumber new infections for the 28th day in a row. Only Tamil Nadu, Kerala, Karnataka and Maharashtra report more than 10,000 daily cases. The GST Council is likely to meet on the 12th of June. Sources say the Council is likely to take up the proposal for GST exemptions and concessions on COVID essentials and black fungus medicines. All right, those are the top headlines, but let's take a look at the Asian markets. They are positive today following cues from the Wall Street market that we saw. Shanghai, however, is flat with some negative bias, but good gains across the board. So Hang Seng is up around 220 points. You're seeing gains coming in from Nikkei as well. And similar is the story as far as Taiwanese index and Kospi and Straits Times is concerned. Let's pull up SGX Nifty. It'll indicate what our markets could be trading at. So it's an uptick of 30 points. So it's a positive start expected for our own markets as well. But the big cue from the US is the inflation data for the month of May. Consumer price index accelerated at its fastest pace in nearly 13 years as inflation pressures continue to build in the US economy. CPI inflation rose 5% against expectation of 4.7%, while core CPI rose 3.8%. Here is CNBC's Steve Lisman with more details on this.
Yeah, a blockbuster inflation number that investors seem to think is either peaking or has already peaked, but providing details that do fuel the debate about whether this price surge is temporary or maybe something more lasting. Here are the numbers: up 5% year on year, highest since 2008. Ex-food and energy up 3.8, highest since 1992. Month over month, these are big numbers, 0.6 and 0.7 ex-energy. Looking at the details, used cars up 7.3%. Airline fares up 7%. Let me tell you, they're 6% below where they were before the pandemic, so maybe more room to run. Natural gas utilities up 1.7%, apparel and food. It doesn't look like much in context, but that's still a lot for food to rise, 0.4%. The hot take from economists shows there's a robust debate about whether this is all going to go away in the months ahead or if high inflation numbers are here to stay. HFE Rubila Faruqi says, quote, "The pace should stabilize and moderate as reopening effects fade and once supply catches up." That's not the view at Morgan Stanley, where Ellen Zentner writes, the more persistent components like rents and OER, that's owner equivalent rent, firmed up as well much more than expected, pointing to a firmer source of foundation for the inflation data as the transitory factors begin to fall out of the figures. And Ian Shepardson with the best line of the day from Pantheon saying, "The Fed better be right about bottlenecks. If it isn't, the risk is a speedier turnaround in policy that is now baked into expectations."
All right, that's the update on the inflation data, but let's get in some opinion coming in from PIMCO's US economist, Tiffany Wilding, on the inflation print.
I think that is the big thing, to understand how broad-based these price pressures are, or how broad-based the wage pressures are. And as I mentioned, within the CPI, it does look like at least the extreme moves are concentrated in used cars. They're not more broader-based. And within wages, what we're seeing is it actually is more concentrated in low-wage and lower-skill jobs. There is an interesting academic research that came out of the Atlanta Fed that basically confirmed this. So it will be really key to understand, are those wage pressures really broadening out? Because if they are, that could be a sign that inflation expectations are increasing. And really, that's what the Fed is going to be caring about. Does this sort of shock in prices that we're seeing now, does it increase inflation expectations? Because that will sort of dictate whether this is transitory or Ultimately, this is not it's not going to stay around. We are going to see inflation moderate at some point. So I think this does not change the narrative from the Fed that this is transitory, and ultimately they will look through it and continue to be patient. Higher wages may or may not actually translate into higher prices. It depends on our businesses. Are they being more productive? And we are actually seeing in the productivity statistics that they are. So that could dampen somewhat. That would increase margins potentially, and that could dampen somewhat the extent to which this is priced on or passed on to consumers.
All right, that's some expert opinion. And despite a higher than expected inflation number, Wall Street ended slightly higher. The Dow gained 19 points, S&P ended 0.5% higher at record levels, while the Nasdaq added over 100 points. And in some important news, after Pfizer, pharma giant Moderna has also asked FDA to clear COVID vaccine for adolescents in the 12 to 17 years age group. All right, a lot of global cues to track, and we've been talking about that, but how will these overnight cues will impact our own markets? Well, we have our research team joining in with how the trade setup looks like, the stocks that are likely to be in the news, and the action from the F&O space as well. Hi guys, a very good morning. Sonia, let me come across to you first. Good global cues today. What are our own cues we need to watch out for?
Oh, absolutely. And in our own markets as well, right? I mean, the bulls have been charging ahead. They've not wasted any time and bought every single dip. In fact, yesterday too, the dip was bought. The Nifty closed above that 15,730 mark, and the markets ended near a record closing high. Once again, FIs have bought and bought big. So they bought about 1,330 crores in the cash markets. All the domestic institutions have sold a bit in the cash markets yesterday. There was a lot of buying in financials, and financials pretty much led the rally yesterday. So the delivery volumes were high in names like SBI, ICICI Bank, even in something like an HDFC Bank. As you rightly pointed out, despite higher inflation, the S&P 500 closed at a record high. In fact, the inflation data in the US hit a 13-year high, with the CPI crossing that 5% year-on-year mark in the month of May. Core inflation in the US rose 3.8%, which was the sharpest rise that we've seen in the last 3 decades. So this is important to keep in mind when you look at how risk assets could behave over the next couple of weeks or so. But for our own markets, the trend has been good. Every dip has gotten bought, and I expect perhaps that's something that could continue today as well.
Okay, so it's going to be a happy Friday for the bulls, going by the cues at least that we are watching out for. Okay, Nupur, let me come across to you. What are the stocks that we need to watch out for?
Well, Sona, let me start with still Authority of India sale, where company reports revenues better than street expectations, margins as well inched higher to 26%, and also company managed to reduce net debt by over 16,000 crores in FY21. Eagles very strong Q4 earnings coming in there, dollar revenue up 20% sequentially, and margins also expanded to 27%. So keep an eye on that. But not the same when it comes to NHPC. Weak Q4 reported by the company. Q4 revenues down 26%, operating margins as well down to 23%. Net profit was higher only due to higher other income. So keep an eye on that stock as well. BHEL, BEML, Sun TV, DLF to come up with their Q4 earnings today. 2 pharma stocks from mid and small cap will be in focus on the back of news flow. Marks & Pharma, where board meets on the 15th of June to consider issue of warrants worth 372 crores at 74 each, of which over 300 crores will be issued to US-based private equity firm and rest to promoters. And lastly, Suven Pharma, where company joined hands with Council of Scientific Research and Indian Institute of Chemical Technology to process technology and manufacture anti-COVID-19 drugs. So that's a positive news coming in there. Back to you.
All right, Nupur, thank you so much for joining us with that list. Mangalam, what are the cues from the F&O space this morning?
Well, very positive cues coming in from the cash market, because the markets have been seeing purchase at the dips, as Sonia said as well. It was a strong session for the bulls, and guess who's back? The FIIs bought almost 1,300 crores in the cash market, notwithstanding the 600 crore sell by the DIIs. But there was some trimming of positions in the future space. The FIs actually sold close to 950 crores in index futures, and out there they unwound close to around 4,600 long positions and also added around 3,800 short positions. And that's good for the market, because we have the long positions which have come down from 18 86% to 82 odd percent. Wherever the long positions are unwound, and Nifty Bank, which outperformed yesterday, saw an open interest decline of 6.1%, while the Nifty saw an open interest increase of 5.5%. So maybe some hedges coming in place. Importantly, the FII long exposure now stands at 82%. So that means shorts are in the system. At the low, it was close to around 11%, and now the shorts have increased to around that 18% mark. But there is a firm amount of support. We saw the 15,700 put at close to 15 lakh shares for a premium of almost 100 rupees. That's selling you 15,600 to 15,700 is going to see a serious amount of support. But importantly, 15,700 call also saw some writing for a premium of 130 rupees. So 15,830 to 15,850 could be a bit of resistance. So that is something we will keep an eye out on. In terms of individual stocks, most definitely watch out for India Bulls Housing Finance. It's been on a tear and yesterday re-entered the F&O ban after exiting it just for a few days. We have Bajaj Finance, a lot of long positions added out there, a record high on that stock too, and some serious short covering is what we saw on Bajaj Finserv.
All right, Mangalam, Nupur and Sonia, thank you so much for joining us and preparing us for this trading day ahead. With that, we'll slip into our first break. Up next, we'll get to the latest on the COVID-19 situation in the country. Hi, welcome back. You're tuned into Power Breakfast on CNBC TV18. Time for some updates on the COVID front. India added less than 1 lakh cases for the third consecutive day with 94,052 fresh cases. However, fatalities have seen a sharp surge after Bihar revised its tally yesterday by adding nearly 4,000 previously unrecorded deaths. Active cases have declined by 63,463. Meanwhile, recoveries have risen by 1.51 lakh. The positivity rate is now below the 5% mark and the recovery rate has risen to 94.77%. On the testing front, single-day testing is back above the 20 lakh mark with 20.04 lakh tests in the last 24 hours. Moving to the states now, Maharashtra added over 12,000 fresh cases compared to nearly 11,000 the day before. Daily deaths too were higher, with 393 patients losing their lives till 6 p.m. on Thursday. The case fatality rate in the state is now at 1.77%. Cases in Mumbai, meanwhile, continue to trend lower, with 660 fresh cases on Thursday compared to 788 the day before. The positivity rate in the city is now at 2.6%. Moving to Karnataka, 11,042 fresh infections were recorded in the state with a positivity rate of 6.58%, of which capital city Bengaluru reported 2,191 infections. With declining positivity rate across the state, the Karnataka state government has announced a phased unlock from the 14th of June. Industries in the state will be allowed to work with 50% capacity, barring some exceptions. Timings for essential shops have been extended, construction activities will be allowed to resume, and parks will be open from 5 a.m. to 10 p.m. although the imposition of night curfew and weekend curfew will not be lifted. And on the vaccination front, 33.79 lakh doses were administered over the last 24 hours, significantly higher than the 7-day average, which now stands at 29.7 lakh doses. Mumbai's BMC has launched a drive to trace people who have not taken the second dose of COVID vaccine. As per BMC's information, over 50,000 people in the city have not yet taken their second shot, despite being eligible and having completed the stipulated time interval between the two doses. Ward offices have been assigned the task on the ground, and the BMC has also allowed walk-ins for those eligible for the second dose. Days after the Supreme Court raised serious questions on centre's vaccination policy, the Bombay High Court has also stepped in. The court has urged the central government to conduct a surgical strike on coronavirus and adopt door-to-door vaccination for the needy, elderly and specially abled people who cannot visit the vaccination centres. The court observed that the centre's current near-to-home approach is not the best strategy for vaccination. It further asked why the centre has not drawn a national policy for door-to-door inoculation, even when states like Kerala, Bihar and Odisha have adopted the same. The CoWIN platform has now been enabled to block users who search for vaccination slots for more than 1,000 times or generate more than 50 OTPs within 24 hours. Such users will be blocked from using the platform for 1 day. The step is a part of a series of measures taken to ensure that people do not deploy bots or scripts to automate slot bookings. Users who have made more than 20 search requests for vaccine slots within 15 minutes will also be blocked. Here's a quick look at some other headlines now. UP Chief Minister Yogi Adityanath is in Delhi, where he is expected to meet Prime Minister Narendra Modi today. He started his two-day visit of the national capital, meeting Home Minister Amit Shah last evening. The meetings come just a few months ahead of UP polls and amid reports of dissent in the Uttar Pradesh unit of the BJP. All right, with that, we'll slip into a short break now. Up next, we get you the cues from the commodities market. Stay tuned. Hi, welcome back. You're tuned into Power Breakfast on CNBC TV18. IT major TCS held its 6th AGM and highlighted that the company's performance in pandemic hit FY21 has been decent. Chairman N. Chandrasekaran said there will be several opportunities post-COVID and the company is very well positioned to benefit from the technology upgradation cycle. Listen in.
The need for transformational initiatives to support the operational resilience shifted to the digital channels, the preference for contactless interactions, and many other trends that have evolved during these 18 months has resulted in all large enterprises globally embarking upon very many different technological initiatives. Your company is extremely well positioned to benefit from this multi-year technology cycle.
All right, that's the word coming in from the TCS chief. But let's move on. The GST Council is likely to meet on the 12th of June. Sources say the council is likely to take up the proposal for GST exemptions and concessions on COVID essentials and black fungus medicines. Timsi Jaipuria is here with all those details. Timsi, over to you.
Well, the meeting has a single point agenda, that is to consider the view of GOM on a rate reduction on various COVID essentials and black fungus medicine. To begin with, GOM has given a clear stated table giving their view where the rates should be reduced and where they should not be reduced. To begin with, COVID-19 vaccines, GOM is of a view that the 5% GST should remain because it will not help the domestic manufacturers. However, GOM did deliberate upon this issue. A few members were actually in favor of giving an exemption, but GOM convener took a different stance, and the GOM's final report says 5% should remain as is on COVID-19 vaccines. When it comes to other essential medicines like tocilizumab, GOM has decided to reduce the rate from 5% to nil. On black fungus medicine, amphotericin B, 5% to nil is what GOM recommends. Anticoagulant like heparin to be reduced from 12% to 5%. Remdesivir GST to be reduced from 12% to 5%. And they've also said that any other drug recommended by Ministry of Health and Family Welfare or Department of Pharma for COVID treatment should be reduced from the current applicable rate to 5%. On other important essentials like medical grade oxygen, a reduction has been proposed from 12 to 5%. On oxygen concentrators, generators, again 12% to 5% reduction proposed. Ventilators, 12% to 5%. Ventilator mask proposal is again from 12% to 5%. BiPAP machines from 12% to 5% is what they've proposed. And HFNC device again 12% to 5%. For testing kits and machines, COVID testing kit has been again proposed for a reduction from 12% to 5%. On various kits for a specific tests like D-dimer, IL-6, LDH, etc., 12% to 5%. Also on RT-PCR machines, they say that there should be no reduction, 18% should remain as it is. So there are certain places where GOM says that the rate should remain as is. Again, on genome sequencing kits, the rate has been proposed to be same at 12%. For raw material for COVID testing kits, it should be again the applicable rate. And here, important, hand sanitizer, 18% to 5% reduction. Then pulse oximeter to be reduced from 12% to 5%. When it comes to temperature check equipment, 18% to 12% reduction. Then again for gas and electric and other finances for crematorium, Again, a reduction has been proposed from 18% to 12%, whereas for PPE kit, mask, etc., they have proposed no changes. So let's see what happens finally. What is the view that the GST Council takes when it meets on Saturday, that is 12th of June.
Right.
All right, so the GST meeting is scheduled for tomorrow and Timsy will be here with more updates on the same. Moving on, US President Joe Biden held a bilateral meeting with the UK Prime Minister Boris Johnson in England on sidelines of the G7 summit. Here is CNBC's Steve Sedgwick with the highlights of their meeting.
Ahead of the G7 meeting of global leaders in Cornwall, England, all eyes were actually on the relationship between the US President Joe Biden and the UK Prime Minister Boris Johnson. Boris Johnson famously had got on pretty well with Joe Biden's predecessor, Donald Trump. So there were concerns about the warmth of the relationship with the current US President. Boris Johnson, for his part, said the relationship went pretty well and the initial meetings went well and that there was an accord on a whole host of subjects, including over Northern Ireland, when asked whether he'd been taken to task by Joe Biden over the UK's stance on the Northern Ireland Protocol. UK Prime Minister said no, there was complete harmony on the need to find solutions on Northern Ireland. In fact, the two leaders also signed a revitalised Atlantic Charter, an 8-point plan to do many things together with the US and UK, including defending democracy, reaffirming collective security and a fair and sustainable global trading system. In addition, the US President unveiled new measures to fight COVID-19 on a global basis, including a massive increase in vaccines available to the rest of the world from the US with no strings attached, according to Joe Biden. Previously, the US had given 80 million vaccines to the rest of the world. Now the US President announced another 200 million this year and another 300 million by the end of the first half of 2022. This is Steve Sedgwick at the G7 in Cornwall for CNBC.
All right, with that, it's curtains down on this edition of Power Breakfast. But do stay tuned. Bazaar Morning Calls up next, the last day of this trading week. Stay tuned.